Hey, it's Linus here. In this video, I'll be sharing with you my Adobe Stock Technical Analysis 2021 and how Adobe Stock might be a potential Wyckoff accumulation example and why this is important for you if you are looking to enter Adobe Stock. So make sure you stick around in this Adobe Stock Analysis video. Alright, so before I begin sharing with you my technical analysis for Adobe Stock, let me give you a quick overview of the Wyckoff method. I won't go through with you all the technicals and the in-depth details about the Wyckoff method. Not in this video at least, maybe I'll do it in the future video. But in this video, I'll just give you a quick summary of the Wyckoff method. So the Wyckoff method is a method invented by Richard Wyckoff himself to help him identify when large institutions are accumulating and distributing stocks. And the reason why we want to identify when large institutions are accumulating and distributing stocks is because a significant portion of a stock price movement is driven by institution buying and selling. So if you want to succeed and be profitable in the stock market, you want to take positions in harmony with these large institutions. And that is where the Wyckoff method can help us. This is one example of the Wyckoff method of accumulation. And this example shows us a general price pattern which stock shows when they are being accumulated by large institutions. Take note that this is just a general schematic. In real life, stock price movement won't follow exactly this price pattern that I'm showing you on this example over here. Because in real life, there are external factors such as news which also affect stock prices. But with that said, when stocks are being accumulated, they still display this general pattern. And there are also some key points to take note in this Wyckoff accumulation schematic. And these key points are the preliminary support or primary support, the selling climax, the automatic rally, the secondary test in phase B, the spring, the test, the last point of support, the sign of strength, backup or the last point of support. These are some of the key points to take note when a stock is displaying the Wyckoff accumulation schematic. Now let's take a look at the price chart for Adobe. So this is the price chart for Adobe, and if you have a keen eye for detail and a good memory, you'll notice how this price chart for Adobe stock resembles the Wyckoff accumulation example. But don't worry, if you can't see it now, it's alright. I've included my drawings on this example instead. So I split this price chart into 5 different sections: Phase A, Phase B, Phase C, Phase D, and Phase E. Because if you take a look at the Wyckoff accumulation example, there are also 5 different phases. And I've included the 5 different phases onto the price chart for Adobe. Now some of you might be wondering, wait, Linus, didn't the example show here that the prices were decreasing before it forms the accumulation pattern? But on Adobe price chart, Adobe wasn't decreasing, instead it was rising before it displayed this chart pattern. Okay, for that you need to understand that accumulation can still take place when prices have been rising before. Accumulation doesn't only take place when prices have been declining previously. It can also happen when prices are increasing previously before the accumulation pattern starts. So you can see over here for Adobe price chart. On the left side of the chart, we have the automatic rally over here, which is the high of the resistance. Then we have the secondary test over here. Then we have the secondary test in phase B. So the secondary test in phase B will undercut the secondary test in phase A. And then after that, we have the spring over here. And the spring will also undercut the secondary test in phase B. So you can see that the spring over here undercuts this line over here. And after prices rise from the spring, there's a test back to the secondary test level in phase B. So this was the test and it corresponds to the secondary test in phase B. And after that, prices continue to rise and it moves to phase D. Once it moves to phase D, there's still some supply of the stock and profit taking. And that is why we have a decline over here. And this is the last point of support before it broke above the resistance and at the high that the automatic rally formed back in phase A. And then this is at the point of strength before prices pull back to this area. And the old resistance turns to a new support and then prices back up to this level at the last point of support before it continues its upward price movement. This is the price chart for Adobe. Now let's take a look at the Wyckoff accumulation example once again. This was the automatic rally and this was the high formed by that rally. And then after that, prices decline, and this is the secondary test in phase A. And then after that, we had a secondary test in phase B, and notice how this secondary test in phase B undercuts the secondary test in phase A. So if we take a look back at the Adobe price chart, we see that the secondary test in phase B also undercuts the secondary test in phase A. Then after that, prices rise, and then it declines again, and then it forms the spring. So notice how the spring also undercuts the secondary test in phase B. So this was the price level that the secondary test formed in phase B, and this was the break below that price level, and then after that prices rallied up, found support at the price level of the secondary test in phase B. So if we go back to the Adobe price chart, we'll see that the spring undercuts the price level formed in the secondary test in phase B, and then after that it rallies, pulled back and found support at the price level formed in the secondary test in phase B. After that, prices rise and there was some profit taking and there are still some available supply of the stock. And then we pull back and this was the last point of support. So if we go back to the Adobe price chart, prices rise over here, some profit taking and there was still some available supply of the stock. It declined back to the last point of support and then it rallied back up. Over here, we see prices breaking above the resistance level formed by the automatic rally over here. And then it break out, found some sign of strength. It pulled back to the price area of the automatic rally. And this was the back up and the last point of support before it moved up. So if we take a look for Adobe price chart, similarly, prices broke above the resistance formed by the automatic rally. Then there was the sign of strength before it pulled back and found support at the previous old resistance before it moved forward from there. So now can you see how Adobe price chart is displaying the Wyckoff accumulation pattern? And with that, we can be quite certain that institutions are accumulating Adobe stock. So if you are looking to enter Adobe stock, should you enter Adobe stock right now? To answer that question, let's go on to Adobe price chart. Okay, this is the price chart for Adobe. So if we zoom in over here, we see that prices of Adobe has risen up quite substantially over here. So if we take our tool over here, at this point over here where prices broke out to all the way to the current high, we see that Adobe stock has risen up by almost 20%. And that is why Adobe stock right now is currently trading sideways to rest and recharge from that price movement previously. So for me personally, I will wait for Adobe stock to break out above this price level of around $627 before entering my position in Adobe stock. So that's my Adobe stock technical analysis. Hopefully you have enjoyed and learned something from this video. If you did, smash that like button because it will really help the channel grow and allow me to produce more content such as this. And if you are new to this channel and haven't already subscribed, make sure you subscribe to this channel because each week I release new videos about investing, trading and the stock market. I'll see you in those other videos to your financial success.